Hey friends, quick question. What's better than regular dividends? How about special dividends and share buybacks? Sounds like a dream for investors, right? That's exactly what Singapore's top banks, DBS, UOB, and OCBC might have in store for us this quarter. Curious to know more? Stick around because today we're diving into their Q4 earnings and what they could mean for your portfolio. Let's get started. Welcome back to the channel. I'm Iggy, your guide here at the Investing Iguana. If you're new here, I cover everything from stocks and finance to CPF hacks and strategies to grow your wealth. Fun fact, the Investing Iguana was ranked 8th in the 2023 Influential Tigers by Tiger Brokers. Over 768,000 reads, 53,000 likes, and more than 300,000 watch hours later, we're still going strong. If you love learning about money and investing in a simple, no-nonsense way, you're in the right place. Let's talk about Singapore's banking giants and why their upcoming Q4 earnings announcements are making waves. DBS will kick things off on February 10th, UOB follows on February 19th, and OCBC wraps it up on February 26th. These aren't just any banks, they're the backbone of Singapore's financial system and major players in the Straits Times Index. So, what's the buzz about these earnings? Analysts are expecting another solid performance from all three banks. But here's the exciting bit. They've got excess capital. When banks have extra cash lying around, it usually means good news for shareholders. Think special dividends or share buybacks. Let's break it down further. Let's start with DBS. Analysts from Galaxy International predict that DBS might announce a special dividend of 0.50 per share and increase its regular dividend to 0.60 per share. On top of that, they've already announced a 3 billion share buyback program last quarter. That's a lot of cash coming back to shareholders. Now let's move to UOB. They've got around $2.5 billion in excess capital. Analysts estimate this could translate into either a share buyback program or special dividends, with earnings per share potentially hitting 150. And finally, OCBC has been quieter when it comes to capital returns compared to DBS and UOB. But this could be their moment to shine. With an even larger war chest of $3.6 billion in excess capital, analysts think OCBC might focus more on dividends rather than buybacks this time around. Their earnings per share could go up to $0.80. Sounds like a cash bonanza for shareholders across the board. But before we get too excited about these payouts, let's take a step back and look at the bigger picture. Here's something interesting to think about. While special dividends and buybacks are great in the short term, some analysts believe banks should focus on long-term growth instead of one-off surprises. The team at Jefferies Equity Research is particularly bullish on the long-term potential of these banks. They argue that if DBS, UOB, and OCBC execute their overseas strategies well, especially in fast-growing markets like ASEAN, their return on equity, ROE, could increase by up to 0.7 percentage points by 2025. That might not sound like much at first glance, but in banking terms, it's huge. Higher ROE means the banks are generating more profit from every dollar of equity they hold. And let's not forget, these three banks are already leading the pack when it comes to total shareholder returns within Singapore at 5%, 7%. That beats other sectors like REITs. So here's the million-dollar question. Would you prefer short-term payouts or long-term growth potential? Now, let's zoom out a bit and look at the overall earnings trends for these banks. Thanks to improved credit growth and resilient net interest margins, or NIMs for short, analysts expect Q4 earnings to be flat or slightly positive compared to last quarter. In fact, Singaporean loan growth hit a 2-year high in November 2024. That's huge because loan growth is a key driver of bank profits. And it's not just any loans. Demand is picking up across sectors like technology, renewable energy, and even SMEs, small and medium-sized enterprises. These are areas with strong long-term potential. But here's a curveball. The recent interest rate cuts might put some pressure on returns in early 2025. For context, Singapore tends to follow US interest rate trends because of our open economy and currency peg system. So when US rates dropped by 50 basis points last November, local rates followed suit. Lower interest rates can squeeze margins for banks because they earn less from loans compared to what they pay out on deposits. But don't worry too much. Analysts believe Singaporean banks are well positioned to weather these changes better than their regional peers. In fact, RHB Research calls Singaporean banks the most defensive choice among regional banks right now because they're better equipped to handle challenges like a strong US dollar or higher for longer interest rates. And there's more good news. Wealth management fees, a growing revenue stream for these banks, are rising faster than expected thanks to Asia's growing pool of wealthy individuals. Plus, credit costs remain low because there aren't many distressed borrowers outside of specific sectors like office buildings. So, what does all this mean for investors like us? First off, keep an eye on those Q4 earnings announcements starting February 10th. They'll set the tone for dividend yields and buyback plans this year. If you're already holding DBS, UOB, or OCBC shares, congrats. You're likely sitting on some solid investments with both short-term payouts and long-term growth potential. And if you're looking to enter the market, consider diversifying across these three giants based on your risk appetite and income needs. For example, if you prefer consistent dividends with potential upside from special payouts, DBS might be your pick. If you're looking for a balance between dividends and growth potential in ASEAN markets, UOB could be worth considering. And if you value stability with a focus on dividend yields over buybacks, OCBC might be your best bet. All right, friends, that wraps up today's breakdown of Singaporean Bank's Q4 earnings outlook. If you found this video helpful or learned something new today, give it a thumbs up. It really helps support the channel. And if you want more insights into dividend investing strategies or how Singaporean banks are set to perform in 2025, check out my video titled Why Singapore Banks Will Soar 2025. It pairs perfectly with today's discussion. Thanks so much for watching till the end. You're awesome! Don't forget to subscribe if you haven't already for more wealth-building content every week. And remember, your financial freedom is just one smart investment away. See you in the next video.